That's what's coming up here. Now, the RBI and the MPC is expected to keep interest rates unchanged for the 10th consecutive policy. But what about the stance and other indications? Latha is here in the studios to take us through what she's making of it. Latha, good morning.
Good morning. Well, it is rate-wise, as our CNBC TV 18 Ritu's poll proved, and the MPC, Citizens MPC, rate action is not expected. I mean, there are too many question marks. Look at the way crude is moving. As well, food, the genie is not back into the bottle at all, if you look at veggie inflation. So they will wait. As well, you know, the quarter that we're now in, October, November, December, the chances are the CPI number is going to come higher than what the Reserve Bank forecast. Reserve Bank forecast at 4.7. It could come closer to around 5%. And therefore, they will not venture to rates. But stands, there is an expectation. You know, when there is a global tide of rate cuts, whether it's all the top three areas, China, US and Europe are cutting rates, it's a little difficult to stand out of the tide altogether. As well, you'll have to admit that, you know, core inflation is around 3.5% for about 10, 12 months now. So there is a very good chance of a change in stance, also because of what people expect, what they will do to the growth forecast. Growth forecast, Reserve Bank stands above the street at 7.2, with the second quarter looking a little duller than earlier expected. You know, IIP was soft, core numbers, I think core for August came in minus, PMI numbers 8-month lows. So chances are that they could bring it down to 7, and that would be a dovish sign. Okay, and finally, there are, you know, outside this monetary policy decisions like the liquidity coverage ratio that's hanging like a sword on the banks, but that will have to be done sooner or later. Chances are they won't do it in the policy because it will just hijack the conversation. There's also higher provisioning for infrastructure projects. Even that, all these are already available as drafts, but they may not approve it in this policy because the concentration may be on policy itself. Now, what does this do to the market itself if the neutral stance is announced, you know, away from the withdrawal of accommodation, which is a hawkish stance? Then you can see bond yields falling. But if it doesn't come, people are not expecting an outsized increase in yields or something, because that after 1 hour after the policy, you'll start looking at crude and you'll start looking at US Fed minutes and stuff like that. So the outsized reaction could be actually on the dovish side. And I'll tell you why. Because of two other developments that have come. The FTSE inclusion, EMGI, it's not a big deal. It's going to mean $4.5 billion will come in September of 25. But nevertheless, that's an overall positive. And that paves the way, of course, eventually for the Bloomberg aggregate inclusion. That'll be a big deal. You know, that's some $25 billion. So all told, the market is in such a positive mood. It'll react positively for a change in stance, won't react negatively if it's, you know, the same as the August policy.
Latha, in simple man or woman's, you know, sense, if I could ask you a question, you've been tracking this for decades, right? The RBI, in my memory, it doesn't really ever move because other central banks are moving. I mean, unless there's real financial stability issues or macroeconomic stability issues, and there's genuine need here back home, does the RBI move because markets are moving or because other central banks are moving?
Oh, there was a time when RBI used to move 200 basis points CRR hikes. You know, 100 basis movement in yields. Those were times that called for it.
Exactly,
now,
that's my point.
We did not hike much.
Yeah.
See, look at the way the US went compared to its normalcy.
Yeah.
It went way out to 5.5%. The standard deviation was much higher there.
Yeah.
Here, the standard deviation was not much. So the cut, when it comes, will not be a big one.
You know, I always go back to the good driver analogy. A good driver doesn't slam the accelerator, then slam the brake, then, you know, race again and all of that. A good driver keeps it nice and steady. And yes. I think we have a pretty good driver.
I think the big point is whether the good driver continues.
Yeah.
And the cues we are getting is that he will. That is a bigger question than all these.
You plan to ask that?
We will all ask that. And he will just turn and walk away.
All right, we'll try. Latha, thank you very much for that.